Welcome back to another exciting, informative live trading session. I'm really glad to have you here again. In today's video, we're diving into a powerful trading setup that combines the strength of EMAs, exponential moving averages, and the MACD, moving average convergence divergence indicator. I'll be using this strategy to find high probability trade entries and exits in the BTC USD market. Whether you're into intraday scalping or prefer holding positions for a bit longer with swing trading, this strategy can work beautifully in both cases. It's simple, effective, and helps you stay on the right side of the trend. So make sure to watch till the end to see how I apply this setup live on the charts. And don't forget to like, share, and subscribe if you find value in it. Let's get started and trade smart together. All right, friends, let's start by setting up our chart with the indicators we'll be using for this strategy. First, I've added the 20 EMA exponential moving average on the closing price, and I've set its color to green, so it's easy to spot on the chart. This shorter EMA helps us catch quicker market movements and short-term trends. Next, I've added the 50 EMA, also on the closing price, and colored it red. This one gives us a broader view of the trend and acts as a dynamic support or resistance line depending on the price action. And finally, we're adding the MACD indicator, using the standard settings of 12, 26, and 9. This powerful momentum indicator helps us identify trend reversals, crossovers, and the overall strength of the market move. So with these three indicators, the 20 EMA, green, the 50 EMA, red, and the MACD, our chart is ready. These settings form the foundation of our strategy, so make sure they're set up correctly before we dive into the live action. Now let's go over the buy setup. This is the exciting part. Here's what we're looking for to confirm a clear buy signal. First, watch for the price to cross above the 50 EMA. That's the red line on our chart. This tells us that the momentum is shifting in favor of the bulls and the market may be heading up. At the same time, check the MACD indicator. We want to see the MACD blue line crossing above the 0 level. This crossover confirms that bullish momentum is picking up strength. When both of these conditions happen together, price going above the 50 EMA and the MACD blue line crossing above 0, that's our green light to enter a long trade. Now let's talk about risk management, which is super important. For the stop loss, you have two safe options. Place it just below the candle that touches the 20 EMA, that's the green line, or use the recent swing low as your stop level for a bit more breathing room. And finally, let's discuss when to exit the trade. Once you're in the trade, stay in it until you see the opposite of our entry signal. The MACD blue line crosses below the 0 level, and at the same time, the price drops below the 50 EMA red line. When these two signals align again, but in reverse, it's your cue to exit the trade and lock in your profits. That's the complete buy logic, nice and simple. All right, friends, now let's go over the sell setup. This is just as important as the buy setup, especially if you're trading in both directions. Here's what to look for when preparing to enter a short trade. First, check if the price drops below the 50 EMA. That's our red line. This indicates that sellers are gaining control and the market is likely heading downward. Step 2, at the same time, glance at the MACD indicator. We want the MACD blue line to cross below the 0 level. This confirms bearish momentum and strengthens our conviction to go short. When both conditions are met, price below the 50 EMA and MACD blue line below 0, that's our signal to enter a sell position. Now let's talk about protecting our capital with a smart stop loss. For the stop loss, you can choose one of these two options. Place it just above the candle that touches the 20 green line, or use the most recent swing high for a slightly more conservative stop, depending on your risk appetite. Once you've entered the trade, here's how to manage it. Stay in the trade as long as the bearish momentum continues. That means the MACD blue line remains below the 0 level and the price stays below the 50 EMA red line. But when the MACD blue line crosses back above 0 and price breaks back above the 50 EMA at the same time, it's time to exit the trade. The downtrend might be losing steam. As for your profit targets, you have a couple of solid options. Go for a 1 to 2 risk to reward ratio, which means your potential reward is twice the amount you risked. Or if you prefer to ride the trend, use the 20 EMA as a trailing stop. This way you can lock in profits as the price continues to move in your favor. And that's the complete sell logic. It's simple, effective, and gives you a clear structure to follow. Now let's jump to the charts and see how this strategy plays out in real time. Before jumping into the trade, let me quickly point out something important. I'm using the 15-minute time frame for this setup. Now, during my backtesting, I noticed this strategy works beautifully well, not just on the 15-minute chart, but also on higher time frames like the 1 hour and 4 hour. So whether you're a scalper or a swing trader, you can adapt this setup to suit your trading style. Just make sure to test it on your preferred time frame first. All right, looking at the current chart, it's pretty clear that the market is in a strong downtrend. How do we know that? The price is consistently moving below the 50 EMA, which is our red line, a classic sign of bearish pressure. And at the same time, the MACD blue line is trending below the zero level, which confirms that the momentum is also bearish. Now, according to our strategy, this alignment is a textbook sell signal. This would have been a great spot to enter a short position. But I missed that initial entry. So what did I do next? I waited patiently for a pullback. That is, for the price to move back up toward the 20 EMA, the green line. Then I looked for a bearish rejection near that 20 EMA, a sign that the pullback is losing steam and sellers are stepping back in. That's exactly what happened, and that's where I took my short position. Even though I missed the first opportunity, this pullback entry gave me a second chance to jump into the trade with a solid setup. Remember, patience and confirmation are key in trading, and pullbacks like this can often offer even better risk to reward entries. Now, once you've entered the trade, here's the important part. You need to stay in the trade until the MACD blue line crosses above the zero level. That's our exit signal based on momentum shift. Until then, let the trade play out and give it room to work. For this particular trade, my personal goal is to take a profit of at least $1,000. And as someone with years of trading experience, let me give you a valuable piece of advice. You should always have a clear idea of how much profit you want to take from the market. If you don't, the market will decide for you. And trust me, it usually doesn't end well. Setting a realistic profit target not only helps with planning, but also keeps your emotions in check. I've seen this happen often. Traders spot a great setup, they enter the trade confidently, but then fear creeps in. They see a small profit and exit too early, leaving most of the move on the table. They're missing out not because the trade was wrong, but because they didn't trust it enough. That's exactly why this strategy works so well. It's not just a random entry and exit system. It combines trend direction using EMAs, so you know the overall market bias, and momentum using MACD, so you know the strength behind the move. This combo helps you filter out fakeouts, reduce emotional exits, and stay in the trade for the bigger move with much higher accuracy. So remember, have a clear plan, follow the signals, and trust the process. Let's see how this trade plays out. As I mentioned earlier, the 50 EMA, that's our red line, acts as a powerful dynamic support or resistance level, depending on how the price is behaving. It's not just a static line, it moves with the market and gives us real-time insight into trend direction and strength. In this trade, we saw a perfect example of that. The price made a pullback right to the 50 EMA and gave us a clear bearish rejection, a strong sign that sellers were still in control. That gave me the confidence to hold the position even as the market fluctuated. I've now been in the trade for over 3 hours, patiently following the strategy, and I'm excited to share that the trade has reached my target, a profit of over $1,000, which was my goal when I entered. At this point, it just makes sense to close the trade and book the profits. Remember, as traders, it's so important to set realistic goals and stick to your plan. That's how we build discipline and long-term success. That's it for today's live trading session. I hope you found it helpful and picked up some valuable insights you can apply in your own trading journey. And finally, if you enjoyed this video, please don't forget to subscribe to the channel, like the video, share it with your fellow traders, and leave a comment below. I'd love to hear your thoughts or any questions you might have. Thanks again for watching, and I'll see you in the next video. Until then, happy trading.